We have Godrej Properties, where its net profit dipped by as much as 65% in the June quarter. And Purva Chitnis caught up with the executive chairman Pirojsha Godrej to discuss the quarter gone by. This is what he was saying about the outlook. Listen in.
I think the sector as a whole is certainly struggling, and I think if you look at it, booking values in the sector have declined quite sharply over the last 4 or 5 years. That said, I think we see no reason that we can't continue to grow quite strongly, even if the sector's growth is a little bit slow. We demonstrated, for example, last year that despite a declining sector, we grew our own bookings by 150%. I think this quarter, by standards of the industry, we still think we were probably amongst the leading publicly listed developers by booking value achieved. But we did fall short of our own expectations of booking value for the quarter. And that was largely due to the fact that some of the launches we hoped to get done in the first quarter spilled out, and you'll see those happen in the rest of the financial year. So I don't think we feel there's any real cause for concern, but certainly the first quarter could have been a bit stronger.
You also mentioned that you've adopted a new accounting standards as well. So what is the impact of it going forward for the rest of the year? Are we going to still see a lag in your earnings?
Yeah, I think the impact of the new accounting standard, which essentially moves most players in the real estate sector to project completion accounting from the percentage completion accounting that was being followed earlier, is that your operations today will really be recognized in your P&L only 2-3 years down the road as projects complete and therefore enter revenue recognition. So this will create some lag effect in terms of reported earnings. It will also create much greater volatility in reported earnings, because what will now happen is that when projects complete, particularly very significant projects, you will see very large amounts of revenue and profit being recognized in those quarters. And similarly, in quarters where there aren't projects that complete or aren't larger projects that complete, you will perhaps see very low reported numbers. So I think investors need to look more at the operating metrics, things like booking value during the quarter, operating cash flow during the quarter, because I think those will probably be a truer reflection of actual operating performance as compared to reported earnings.
According to some recent reports released by the consulting firms as well, we can see that the supply side of the sector is kind of very sorted. Like you have new launches coming back, then prices have dropped as well. But the buyers are still on the fence. What do you think is the reason for that, and what do you have to say to the buyers who are still sitting on the fence?
Yeah, I think it's absolutely correct that the buyers have been sitting on the fence. I think one of the reasons for that is that there's been a lot of policy churn in terms of things like GST, the Real Estate Regulatory Act, and that may have actually had the unintended consequence of pushing out the real estate sector recovery a little bit. But our sense is if you look at things like affordability of real estate, as a result of the 250, 300 basis point decline in interest rates over the last 4 or 5 years, although that's now starting to go the other way a little bit, as a result of people's growing incomes over that period, and also the fact that real estate prices have now been flattish or even declining over that period, you've seen the affordability of real estate dramatically improve over the last 5 years. So we remain very confident that that will drive the next leg of recovery in the sector. This is always a very cyclical sector, so when the markets are slow, people assume that is how it will remain for some time, and that's typically not been the historical track record for the sector either here in India or globally. So we believe the next few years will actually see a period of very strong recovery for the sector. But yes, I don't think that period of recovery has yet begun.